Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Bob Johnson, CEO of Economic Index Associates, a developer of active index strategies that are replicable, investable, and transparent. Bob joins us to discuss EIA's recently announced partnership with Nasdaq. Bob, it's great to have you with us. Welcome to Trade Talks.
It's great to be here, Jill.
Thank you. And tell us about EIA and your recently announced partnership with Nasdaq.
Sure. At Economic Index Associates, we use Fed monetary policy signals and key firm metrics to select portfolios positioned to benefit from existing market conditions. Our IFED indexes are active, replicable, investable, rules-based, and transparent. Our first listed index is the Nasdaq IFED US Large Cap Index. And we're really excited to work with Nasdaq and look forward to future collaborations on an entire suite of products based on the IFED methodology. With this partnership, we're pleased that our indexes will reach a broader audience to allow more investors to benefit from having their portfolios properly positioned for changing market conditions.
Tell us more about EIA's research and the IFED methodology.
Yeah, it's really been a labor of love, and it's been over a 30-year period. My co-founder, Jerry Jensen, and I have been doing peer-reviewed research on the association between Fed monetary policy and capital market returns for nearly 30 years. The IFED methodology is research-based and is a top-down and a bottom. Top-down is utilize a model that, employing Federal Reserve monetary policy signals, defines the market environment as expansive, restrictive, or indeterminate. Once we determine the market environment, we use a bottom-up approach to select stocks that are best positioned to thrive in that environment. We rank firms utilizing our IFED model to determine an IFED score based upon 12 firm-specific metrics. In the case of our IFED-L index, the 75 firms with the highest IFED scores selected from a universe of the 500 largest stocks comprise the index. And importantly, the stock weighting in the index is also based upon the IFED score, so that firms with the highest scores receive the highest weightings.
So, Bob, what can you show us to support the efficacy of the IFED methodology?
Well, we're pretty proud of this chart. The chart on the screen shows the efficacy of the IFED methodology in both selecting those stocks that are best positioned to thrive in each market environment, but also those stocks expected to struggle in each environment. This chart displays an analysis by IFED score of the 500 largest US stocks over a period from 1999 through June of this year. The stocks with the 20% highest IFED scores are represented by quintile 1, and the stocks with the 20% lowest IFED scores are represented by quintile 5. As you can see, the returns to the quintiles declines as one moves from quintile 1 to quintile 2 to quintile 3 and so forth. Also note that even the stocks represented by quintile 4 outperform the broad S&P 500. Now, one might ask, how can that be? How can you have 4 out of the 5 quintiles outperform the S&P 500? And the answer to that question is that each quintile is also weighted by IFED score, so that the stocks in each quintile with the highest IFED scores are weighted more heavily. What this indicates is that the model is not only adept at selecting outperforming stocks, but also adds value in weighting the holdings.
How has the first index, the Nasdaq IFED-L, performed to date?
Well, we're pretty proud of performance, and you can see the chart that's on the screen. As shown in the left-hand side of the chart, since the index was first launched in June of 2020, it has performed very well when compared to other large cap indexes. From June of 2020 through June of 2022, it's provided an alpha of 17.31% when benchmarked against the S&P 500. The right-hand side of the chart shows that year-to-date through June, the Nasdaq IFED-L has provided an alpha of 11.93% when benchmarked against the S&P 500. And I'd also add that the period examined includes both a market environment following the pandemic that was characterized by unprecedented expansive monetary policy and the more recent restrictive monetary environment. I would say that the IFED methodology is truly an all-weather strategy.
So with that said, what kind of stocks are expected to perform well in a restrictive market environment?
Our research shows that in restrictive market environments, firms with strong balance sheets and leading positions in their market niches perform very well. Currently, 5 of our top 10 holdings are financials, and 3 are in the information technology sector. Now, it should be noted that our model does not have a sector allocation element. That is, stocks are selected based upon their firm-specific metrics and not based upon inclusion in any sector. For instance, while 3 of our top 10 holdings are in the information technology sector, there are many other firms in that sector with very low IFED scores, and these firms are not included in the index.
And finally, Bob, what new indexes will you be launching with Nasdaq in the near future, and where can investors go for more information?
Yeah, as stated earlier, we're very excited about our partnership with Nasdaq, and we will be launching 2 indexes in the very near future. The first is an IFED low volatility index, and the second is an IFED 4% target volatility index. Further out into the future, we anticipate launching indexes based upon different market capitalization segments, such as a small cap and a mid cap index. And for more information, please go to www.economicindexassociates.com.
All right, Bob, appreciate the insight. We look forward to learning more. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.